Okay, good morning, traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, September 27th. We just got the release, guys, of some US data. So I'm going to read it through real quick. We got biggest print, I guess, would be the core PCE, personal consumption expenditure. Again, the Fed's preferred gauge of inflation, coming in at 2.1% for the second quarter, a little bit higher from the 2% clip that we expected. GDP annualized also came in steady at 4.2%. That's the third read for the second quarter. So the only tell here, the only takeaway is this slight uptick in the second quarter, third read, the second quarter PCE, personal consumption expenditure. Durable goods also topping out expectations 4.5%. We're looking for a print of just 2%. A slight upward revision to the previous month as well. So pretty good data for the US. You're seeing the dollar with a little bit of a climb here, but we are looking for some exhaustion near term. A lot to cover today, guys. Jaya, good morning to you. Peter, we'll definitely take a look at Pound Oz. Hey, Ty, great to see you. All three Pete's in the room. Marco, Mark, Jaya, great to see everyone today. DJ, Iman, always a pleasure. So, Iman says, good morning. What a beautiful sterling trade upon FOMC event yesterday. Thank you. Yes, so the sterling is actually my favorite play. Was the best play that we had yesterday. I'm out of the majority of that position. I do have a little bit left on. I do believe that Jamie tweeted out break-even stop for the rest of that swing trade you guys are in. So we'll take a look at pound on the list for today. Let me show you what we're looking at. So I have DXY, euro, pound, dollar, yen. Also very interesting. I've been stalking that one. I'm glad I didn't pull the trigger yesterday, but I am still looking for a fade opportunity there. Pound Aussie for Pete. We'll take a look at that, Peter. Euro, yen, Aussie, dollar, and then we'll take a circle back at Kiwi. Not really involved with any of the commodity currencies, to be honest with you guys, but we'll take a look at Kiwi and gold. Okay, with a very interesting play, now testing the lower bounds of that consolidation region that we were in. So we shall take a look. All right, any other questions or trade setups you guys want to review? If not mentioned, feel free to throw them on the message board at any time. So, quick recap of FOMC. Here's the print that we got yesterday, okay, for the updated projection. So quick takeaways here. The major thing that you're looking at that markets ran with was the upgrade for the GDP growth projections from 2.2% in June, moving it up to 2.4%. Unemployment rate, largely still steady. PCE, largely still steady as well, okay? So not much of a deviation there. In fact, core PCE is seen a little bit softer at 1.5%. So they're kind of playing both sides here. I'm sorry, this is not the right one. I'm looking at it, I'm like, something doesn't make sense. Here we go. That makes more sense. Okay, we'll try that again. September 2018. There's the upward revision. This is what everyone was running with: 3.1% over 2.8%. Core PCE steady at 2.1%. Excuse me, PCE steady at 2.1%. Core steady at 2%. The dot plot didn't shift much. The only thing that you did see was a revision to all the members with regards to what we're going to see this year. So everyone's basically already priced in that fourth rate hike in December. And you saw a slight adjustment to the terminal run rate. Yesterday, you might have seen, guys, I tweeted out that comparison chart. Let me bring it up real quick. Okay, so here's the comparison chart from the previous quarter and what we're looking at now. So again, the shift is that you saw one of the members who were down in here in the 2.75 camp basically move up into 3. So the terminal rate moved up a little bit. And more importantly, you're seeing a little bit more of a cluster here for the 2019 projections. Remember, next year, it's a month-by-month release. They can hike at any month since there's going to be a press conference at every single policy decision. So, you know, growth looking a little bit better, interest rates a little bit higher, dollar didn't really get much of a kick, right? And that shouldn't be too much of a surprise because markets have already been pricing this in. Let me just bring up the weekly charts there as well. And that really leaves interest rates at sort of where we left off. So again, if we look at the Fed fund futures, or what markets are pricing in for interest rates in the future, December is pretty much priced in fully. Okay, you're at 83% essentially. Anything 16 above, historically speaking, guys, as far as Fed fund futures, typically leads to an interest rate hike. So past December at 2.5%, the next expected rate, still at 2.5 in January, still at 2.5 in March. May, things start to switch up, and you start to lean towards above 50%, almost 60%, or actually just above 50% for an expectations for another rate hike. So we'll be watching these months out front for March and May, moving further in the year. But that's kind of the main concept of what we ran with yesterday. Don't want to get too much more into detail beyond that. Let's jump into the charts. If anyone has any questions, feel free. Our base case scenario, remember we talked about it on Tuesday, was for some sort of dollar recovery to fade. The dollar recovery itself also offered some opportunities. Obviously, on the swing side of things, Jamie and myself took advantage of the sterling. I actually was in a dollar CAD position yesterday, guys. Believe it or not, I actually made a nice, decent little chunk of change on there. On the short side, interestingly enough, a third of the trade got stopped out at break even as we ripped higher. But the dollar rebound, well warranted from this position. This is the only expectation that we had, is that 2016 low week close, 38.2 retracement, gave you 93.65, 93.89. That's near-term support. So we're still looking for broader confirmation. A break below this region really opens up the fact that this may be a much more important high. And again, this slope has been magnificent off that 2011 low. All of these slopes are derived from that singular gradient. And here's the pullback. So this is your first area of support that we need to get through. Weekly close below this is what will mark resumption. On this rebound, though, what should we be looking for? Well, here's a daily chart. I'm looking for exhaustion close by. The first level that I'm kind of just keeping an eye on right here is just this 100-day moving average. It's been kind of decent as a pivot in price, break, acceleration, support, break, acceleration, resistance, support break, move on, resistance break, move on, support, support, break. This could be the test of it as resistance before we move on. Also, the upper slope, same parallel of this is just this year's gradient off of this year's low. You saw that parallel take resistance, resistance, break, support, support, break, resistance. So you can even see a little bit higher near 94.80 before you start to get concerned that the dollar is turning around or anything. So a little bit more room to the upside, okay, I think in the greenback, but ultimately we're looking for this rally to start to fizzle out. Here's what it looks like intraday. So the formation that we've been following all week long, this pitchfork, I guess all month long at this point, we highlighted last night the August low as near-term resistance. That's 94.43, decent pivot in price, but it's also the 50 line, the upper 50 line or the 75% line, whatever you want to call it. The break there's the confluence region of resistance. Now, ideally, we start to fail here. Okay, 94.80s. Again, this is going to be on the daily chart, the same spot we just looked at, okay, for that red up slope resistance. So I'm looking to see for a reaction here. As I marked last night, I'm still going to keep bearish invalidation at 94.96. Okay, if we make it back above that key 618 retracement, just a major pivot in price over the last few weeks, at that point, it'd be kind of foolish to start fighting it. So the idea right now is to look for resistance somewhere between 94, let's call it 94.75, 94.90 as an ideal area to start to look for some dollar weakness. Now, the one good thing about this that I do want to highlight, just on the short-term front, is that it's a very clean, and it's the same thing with the euro, okay? Very clean and objective break of the weekly opening range. You don't get them this clean that often, guys. But when you do, they can be very useful as a tell in price. So here's your opening range for the week. You set a high, you set a low, test a high, test a low, test a high again, break. You're looking for a Thursday, Friday high. Okay, so I'll be looking out for some exhaustion either today or tomorrow on a rally, ideally into this parallel. You start to see some a correction back below 70, a momentum trigger, something. Or, maybe an exhaustion spike through 94, 96 before it turns around. Might be a decent trigger to work with. I kind of would be favoring working with this one though. Whoops, just off of this week's low. Got a little bit more touches there. All right, so if this ducks back below 70, you get the trigger break, especially if you get some sort of outside reversal candle or doji at the highs here. That's really where I'd look to attack the fade. Right now, immediately, the risk is still for a little bit of a push higher. Not too much higher, but a little bit higher. Any questions on the DXY? Where we stand? Questions on the Fed or anything of the like? If we get through 70, look higher after the pullback, tie. If we get through 70 on momentum, RSI. So if you get a 70 break here, that's not something you want to fight. In fact, that would work really well for our sterling position short, right, which we're still in. So I would love for that to actually materialize. But that fueled rally should give us a spike into one of these levels that we would look to fade in. The RSI break back below 70 tie is what would be the sort of trigger in momentum to put us into the position. If we get through 70 looking higher after pullback. Are you asking like the broader picture, Ty? I'm trying to interpret your question here. This 70 break here near term just fuels the rally that we're in. No, I wouldn't make any major broader. Okay, very good question. So he says yes. So I wouldn't make any larger, longer term assumptions based on a 70 break in momentum on the intraday. If we're talking about something a lot longer term, maybe the 4 hour, if it breaks 70 would suggest that you probably don't want to fight the trend just yet. But assumptions like that, Ty, I keep more for the daily and weekly charts. When momentum breaks into overbought on those time frames, it tends to be a lot more of a significant technical assumption to make. But intraday, or even on the near-term time frames, you could see a 70 and a 30 break in 1 week. So I don't want to make any longer-term assumptions. All I do know is that near term, if it does break through this 70 and on this close of the candle, that's when the market has the most fuel. Again, don't take anything I say for granted. Look back in price, guys, right here, the 70 break. A lot of people might have been thinking, oh, this is a great short, we're in overbought, right? Well, you would have gotten your face ripped off from 95.10 into 95.75 before this thing started to turn, right? It's the 70 break to the downside that would have been the proper entry. So, not really operable on a topside break here, but certainly suggests that there is more upside to go. Make sense? Hi, new here. What's the direction? What's the indicator? And is that available on TradeStation? Hey, Mark, welcome to the room. This is just a simple RSI, Relative Strength Index. Nothing special about it. You'll find it on any objective trading platform that you're using. And it's just a simple gauge of momentum. Hey, you're more than welcome, man. Welcome aboard. Tide says, would you buy the euro on the reversal? Yes, on the pullback after we get a correction, Mark. I think that's the question you're asking. Yeah, so remember, Mark, we're under the assumption that euro made a pretty big low, right? So I do like the euro higher. Would you buy the euro on the reversal? Mark says, of the DXY. Yes. So yeah, so I'm getting what you're picking up here, Ty. Sorry, I'm a little slow still, my man. So if this does get into a rip here, and it does fizzle out, the position I would be looking to take more advantage of is the euro, absolutely. And we'll look at that next. Any questions on DXY before I move off? No change to any of the levels from yesterday. Okay, we're looking for exhaustion at one of these two regions. If we top 94, 96, I'm going to let this thing sit. At that point, you might be in for a larger dollar recovery. Not our favorite scenario, but certainly something we have to plan for. Next up was euro. And here's the updated charts for euro I offered last night. As I noted, this thing had a clean, very much like the DXY, very clean and objective weekly opening range. As I noted in the webinar yesterday, our ideal scenario is a downside break of this range to get us entry 1694 was an level of interest. 1657 was a level of interest. We're trading below this right now, above the 100-day moving average. Here's what. Well, let me show you the whole time frame, guys. So here's the weekly charts for euro, just to put things in perspective. Here's euro on the weekly, right? 60% heavily weighted. The DXY is euro, so it's not surprising to see its DXY coming off support. Euro coming off resistance. Just basic 38.2 of the yearly range, nothing fancy. I guess you can call that a 50 rebound from the upside. So yeah, sure, give it a little bit back, right? The broader picture, weekly bullish invalidation is 1525. We've been following 1527, 1530 for a couple of weeks now. Remember those lows back here? It was the low here. Now it's also that parallel. Support, support, break, resistance, resistance, acceleration. Here we are. So longer term, we're still constructive. We're still under the assumption that a more important, more significant low is registered here in August. The immediate front, we're looking for this drawback to get us better entries. Daily chart looks like this. Okay. This is sort of a good spot to start to look. Here's the daily chart from yesterday. Again, 1793, 1780. We've been talking about this region for a while. Beautiful confluence of a 38.2 retracement of the yearly range and a 618 extension from the advance off the low. That's governed the highs for the entire month. The pullback now testing the first initial area of support, 1684, 236 retracement, and slope support they see here in blue. Okay, just lower, you have that 100-day moving average near 1656. So, ideal scenario, you start to see a failure at one of these two levels. Look, we have a momentum trigger break. If we break below the 100-day moving average, again, it would be a very similar scenario that the DXY that we just talked about. In such a scenario, we have to respect a larger correction lower before we start to rally. But the ideal scenario would be some sort of hold between 1684 and that 1656 level. Okay, so we're right here at the first support range, first confluence support range. Intraday looks like this. And again, a very clean weekly opening range, right? Boom, there's the break. 1694 got taken out on the way down. Here's that 38.2 that we're testing, again, from the longer term slope. This is 236 from the ascent off the lows, okay? There we go. I knew something was off. 1694. Okay, there we are. So that 100-day moving average is the next sort of level. If we spike here intraday, I'm not going to necessarily call it a break. We're going to need to see a daily close below this parallel to validate that we have a larger reversal underway. Ideal scenario, again, in the intraday positioning here, we drop lower towards 1657. And then we start to fizzle out. I want to see a recovery in this thing before starting to get aggressive on it. But right now, the immediate risk is still lower below 1694 into the US Open. Okay. What else could I say about this? Okay, so the 30-minute chart, you're starting to see some divergence in price. I don't think this is going to last too long, guys. That's the whole point. I think we need to be looking for an entry here somewhat soon if it's going to rebound. So I'll be watching this divergence on the 30-minute. Let's see what it looks like on the 15, 10. See, this was a perfect trigger break, guys, for those of you who are kind of still getting your feet down with that. One touch, two touch, three touch, rebound, break. That break below the trigger, short position against the swing high. If you're in that, be looking to take a quarter of the daily ATR off your next level. Again, 1658, guys. This is a rough estimate of the 200-day moving average, of the 100-day, moving average. So we're right about there. All right. I want to see failure ahead of this if we are heading higher. okay? But the immediate risk, again, is still lower right now. One thing also that you want to take a look at, guys, we were talking about RSI. Who was asking about that earlier? Was that Utah? Daily RSI tends to be the strongest tell of broader momentum in trends. And the fact that Euro broke this trigger break after failing to really mount a assault above 60 gets me a little concerned. Remember, in strong uptrends, 60 resistance, right? In strong downtrends, 40 support. Or excuse me, exact opposite. In strong downtrends, 60 resistance. In strong uptrends, 40 support. So we definitely haven't been holding 40 support. If this low is a more concerted low on a pullback in momentum, I definitely don't want to see this sink below 40. So we'll have to assess this as we get into the start of October trade. One last tidbit, guys. I'm going to keep throwing this at you the entire session today. There is only 2 days left for the end of September trade, for the end of the third quarter, and it's not the best time to be aggressively intraday trading. Last night and yesterday, yeah, I took 4 different positions, but that's because we had event risk. Levels were clear. As far as now Thursday and Friday is concerned, end of quarter especially, guys, is just not a great idea. So trade lightly, lower your position size, be nimble and meticulous with your entries. All things held constant, I'm looking for exhaustion in the euro just a little bit lower from here. Any questions on euro? Okay, so next on the list is sterling. That was number 1. Number 2, British pound. Here's sterling. So the trade I was most involved in yesterday, I got in heavy on this one. So I kind of faded a lot of it, or I chipped away at it on the way down in overnight trade. Now, I basically took a third off at the 4-hour reversal bar. This is a 2-hour. I'll show it to you in a minute. It got a little bit deeper, rebounded a little bit, but for me, I'm still favoring a drop near 30.55, 30.50, basic 38.2 retracement. You got slope down there. We made it through this ascending slope formation, so the break to the downside certainly is kind of gives this thing some conviction. But the only other thing I want to note is that on whole, we haven't even broken or made any kind of validation of a weekly opening range. Here's your weekly open. You stretch into a high. Next day, you stretch into another high. Here's FOMC, right? You had a 4-hour outside or a 2-hour, outside reversal. Yeah, it didn't materialize in the 4-hour, but a 2-hour outside reversal bar off resistance. Guys, I know you were in here in the room yesterday, all of you, or on Tuesday. You guys know my favorite Fibonacci confluences. 9 times out of 10, if it's decent position or the structure is decent, I will take a position against that. A 100% extension off the low, 2 equal legs, a 618 retracement off the high, and former swing highs from July. Okay, 32.05 into 32.13. That was the level that we were looking for ahead of FOMC if prices are moving lower. We spiked into it, and then he made a 2-hour reversal bar, outside reversal bar off it. So, point in fact, I got in this before the 2-hour reversal closed out, but certainly once you're in the position, you see that, adds further fuel, right? Gives you the conviction for the position. So, the entry or the third I took off of the position, guys, was here. And I do this sometimes kind of just to get, it's to play a little bit closer to the chest. Again, we're heading towards really nasty environment for a near-term trading, but there's the 4-hour reversal that we made early in the week. So a third of the trade got taken out there. Stops are now at break even. We're in just about 31.84. So, if it gets higher and it takes us out, so be it. All things held constant, this is still your next downside target. Now, mindful of the fact that that's just pips below the weekly opening range. So I'd hate to see someone kind of leave your limit at 30.50 and then this thing gets into 30.52 and reverses. So just remember the low is right there, 30.61. Take a little off the table, get more defensive with your stops if price drops down there. But this is sort of the bigger level I'm looking for. for a reaction for, let's say, in sterling. Okay, here's the 60-minute. What's happening near term price? Looks like it's going to be an hourly outside reversal right here. So see if we can't get some juice on this. Bear with me one moment, guys. I just want to see what this pitchfork looks like. All right. Typically, I don't like working with these really steep gradients. Yeah, I just found over time they don't tend to work typically as clean, but it does sort of give us near-term support here, still at 30.55, the 50 line. So it still looks good. I still like it. Man, I hope, I don't know if you're still in it or not. You look like you're pretty excited about that earlier in the session as well. So, all things held constant, guys, no change. The only thing I want to, again, bring out to you is that we're still in the weekly opening range. So the bottom line is if that last target or if this first target gets taken out, you probably have a conviction swing lower to 29.80. You start to look for basic slope support a little bit higher, right around here, a little bit higher above this key region of support. It's a major pivot, 128.77, 129. I'd be looking at this slope support off the lows if you get the break. Again, this is all really forward looking here. All right. Questions on sterling? Believe it or not, sterling is actually the best performer against the dollar. I mean, it's down versus the dollar, but it's still the least loser, the smallest loser, let's call it, heading into the U.S. trade session. Okay, yes, I will get to gold today. Yeah, amen. So just give me a minute. Let me get a little bit past these. Any questions on sterling? One of my favorite positions right now. Nothing changes to any of the levels from last night. And at this point, did I lower bearish invalidation yesterday? Yeah, at this point, it's just the weekly highs, right? Is the bearish inval. If we get through the weekly high, you're going to refute this downside altogether and look for resumption. And the broader picture, I still think you do get some upside in sterling. It's just that from this decline, like I said early in the week, guys, I just think it needs to make another low. We need a new low from this drop off the highs before we look for resumption. Just from a simple, objective kind of corrective mode. Even if we take an extension off this high for like a 2 equal legs lower, let's say. Oops. Something like this. The 100% is still down at 29 and change. Let's put this on the intraday chart. Just above that 50% retracement right here. Okay, look at that. Right below 50, the 50% retracement. So again, 50 off the low, 100 off the high, gives you 29.73 into 29.80, 7 pips. So in the event of a downside break, by the way, the 618 also converges right here. You know what? I'm willing to bring that up a little bit. Let's scratch this low, okay, and work with this zone here, 30.55 into 30.67. That's the level to be to get the resumption or to get the drive lower in sterling. Okay, but definitely for those of you trading near term like me, I'd be taking the majority off here. Again, a third was taken off at 31.20, taking another third off here, and then we'll go probably bring our stops down to that swing high that we just made. Okay, look, for me and for you guys, we tweeted it I think this morning for a break-even stop last night on the swing trade. If it gets through that, it's not even worth it. Let it go. We're heading to the end of the quarter. It could jackknife right back into 33, and I don't want to be sitting in that. So hope that helps, guys. Any questions on sterling? Look at that hammer, says Ty. And again, looking at the momentum signature here from the turn yesterday, right? 60s held resistance so far in momentum. We got to drive into oversold conditions. So that's what you want to see. All right. Without further ado, dollar yen. Here's the abomination. I'm going to pick up the pace just a little bit. I love these sessions, Mike. So glad you're back. Thank you. Hey, Ty, more than I appreciate that, sir. It's great to be back. All right. So the other one was dollar yen. Check this thing out. So I was so close here yesterday, and I was actually like kicking myself after the Fed. I told you guys about 1308, 1327 for the longest time. You know, I've been looking at that same region. It comes up as a significant area of resistance on every single time frame. Here's your daily chart. Let me start off with the weekly charts. Forget about it. Okay. The weekly charts, one thing it does highlight is that we have a little bit more room, but not beyond 1327. Here's a 618 retracement of the 2017 decline. Here's your objective yearly opening range highs. Here's your objective yearly open at 1265. And you have the objective 200 week moving average. You can't make this stuff up, guys. It's so loaded at 1327 that a topside breach there should really see acceleration if we get it. Not the favorite scenario. I want to see this thing hold, point in fact, but you know what I want the market doesn't give a damn. So if it breaks through 1327, specifically on a weekly close basis, guys, it's done deal. We don't want to fight it. You're looking at 1530 at that time concept on the longer term, but you know maybe soft targets at these swing highs would be the first place to look. But if you break through this, you know, sayonara. Our base case scenario is that right now we're looking for possible exhaustion. Okay, so the weekly charts further highlighting this, the technical significance of 1327. Again, your yearly opening range high comes in at 1338. Okay, so we're not going to split hairs here, but you're coming into a big, big region. In fact, I'll leave that on there, and I will get rid of the shaded region and make this the yearly open. All right, weekly, right? Weekly, really, really clear. Daily chart, there it is again, 618 retracement. It's also the high day close for the year, 1308. That high day close registered right here in January on the 8th of the year. So again, highlighting that. The former swing highs that we made back in July, right? Just a beautiful spot for this to fail. Now, me and Jamie were talking about this. And I think we threw something on Twitter as well. You know, kind of makes me feel like during these, when we make these highs in dollar yen, it's the abominations. You want to think of what's the move that would screw as many people as possible. In my humble opinion, it would be either a test or breach of that July high to get everyone starting to get really, really all bullish, and then all of a sudden it rips everyone's face off lower. I don't know if that's the scenario, guys. We can talk conjecture all day long, but at the end of the day, this is still the region. If we're going to fail in dollar yen, I'd be looking for failure. Okay. And with the same respect, it's such a clear pivot in price that if we do close the week above it, well, at that point, no, there's no point in trying to fight it, right? Maybe a break and fail at slope after the breakout. A break and fail at could be, yeah. Ty is another. That would be actually a really nice development in my humble opinion. So maybe a break here. Ty saying and you tag the median line and then you jerk lower. Everyone gets super bullish. The only thing that kind of steers me away from that process here, or that thought process here, Ty, is the fact that the median line in this formation hasn't really been that definitive of a pivot, right? So yeah, I will use those levels. Let me take a step back and just to kind of break down what I'm thinking. I will use that level at the median line as a target if I'm rallying, or if I'm long, and we break through, I would take something off there, right? But I don't want to necessarily try to fight a trade based on that line just because we haven't seen too many pivots off it. It was really much more effective early on in the formation. Resistance, 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 break, acceleration, support. Then after this recovery, it's kind of been not as clean, right? So yeah, that's definitely a possibility where it could rip right into this, fail, and then move lower. On a closed basis, I do want to see 1327 respected as resistance if this is going to work. Okay, if this is going to work. You got the high day close for the year. You got a key 618 retracement. You got monthly swing highs. You got a 200-week moving average. I mean, it's loaded. So for me, in my humble opinion, again, this would be a conviction position if we get some sort of exhaustion in price. Here's what the intraday chart looks like. Can't get long here, can you? No. Well, let me take a step back. Yeah, you can. Would I want to? No. Just my humble opinion. I would not be looking to buy at multi-month highs into resistance. That's just it's just not something I would do. Now, if we were to break through 1327, okay, Ty, and your scenario pans out, right? Let's say it breaks through and it tags that median line on the pullback. If the pullback fails at 1308 yearly open, 1327, if the pullback fails in this region, then that would be an opportunity for me to get long, right? Because it'd be a break of resistance, test of support, then move on. But to buy here is just not prudent in my humble opinion. I'm still looking for exhaustion, and you're getting it. I mean, look at this momentum signature, guys. Every high we've registered so far this week on a 4-hour chart has been on divergence. Don't take my word for it. Here it is, right? Higher high in price, higher high in price, higher high in price, higher high in price. Since that Friday high, there has not been one new registered high in the momentum oscillator. So again, suggesting that the topside juice, the push behind it, starting to fizzle out. This trigger I was looking at with you guys yesterday ahead of the FOMC, it broke lower, tested as resistance at first and moved again. I got to start to get excited that we were going to get the recovery, but here it is again. So this trigger does nothing for us now. And ideally, you kind of want to see something like this hold. This is the divergent slope, right? Lower high, lower high, lower high, series of higher highs. So another spike, I don't know if it comes today or into the end of the month, tomorrow, to take us into this region and a pullback, I'd be fading such a scenario. Does that make sense, Ty? It says insanity, right? It's dollar yen, man. It's the definition of insanity. Okay, he says, yes, thanks. All right, so that's the abomination where I stand on that. Still stalking this thing for entries on the short side, and I think we get it. I think we get it relatively soon. I'm not sure what this level is. Why is this here? Okay, that's dollar yen. Patience is the best thing with that pair. Yeah, it says Eman. Yep. Patience or abstinence, Eman. One of the two. Although I was very close to pulling the trigger here yesterday. It was a very nice outside reversal candle on the back of the FOMC there, but we were right back at support last night. So I really didn't have a position on this that was available to try to fight it. If we get another push higher again, I'll be looking for entries. Next up, I'm going to take a quick segue to pound yen. Who asked about that? Peter, was that you? Yeah, Peter Green. Here's pound yen, man, number 5. So interestingly enough, Aussie weakness has been the driver here more so than pound weakness. So we went over this. Dollar yen levels, guys, unchanged, okay, from earlier in the week, or from last night, that is. Okay, earlier in the week, here's pound Oz. So the major key area is 79, 17, 83, and 183. This is the sort of major zone on the weekly charts that we need to be paying attention to. It's this zone right here, guys. Again, just to give you a clip of the weekly, it's this zone right here. This is the world for pound Oz as it stands right now. Now, one of the reasons that our objective bias, at least heading to this week, was to try to short this was the fact that last week you made an outside weekly reversal off resistance. Okay, you have the 200 long week moving average. You have basic slope. So this line right here is just a parallel of the same gradient for our pitchfork that we've been in since the 2016 lows. A basic simple parallel off that also converges right on that region. You can see on the even on the spikes is almost to the pip. And just a really nice development off of a critical 38.2 retracement of a multi-year decline, right? Multi-year. So this is the whole Brexit, pre-Brexit into post-Brexit, 618 retracement. So this is the entire world for pound Oz, 179.17, 183. Near term on the daily chart looks like this, okay? This was a beautiful spot that we had highlighted because also it's the objective monthly open. So you have the 2017 high close, you have the monthly open, okay, it's 79.33, 79.50, and it also converges on slope. So this is still the sort of key region in play. Now, the near-term chart that I highlighted to you guys earlier in the week, by the way, here's another reason that we got bearish to begin with. Higher high in price on a closed basis. It's all you're looking at when you're trying to ascertain divergence. Lower high. One of the reference points above 70, one below. And on that reversal, even off the highs, an outside reversal candle. Okay, these kind of developments can be very telling. So we start off the week or last week we came back, big drop into this support. We started off this week studying this advance, and we were looking at a near-term structure to suggest that this thing might be heading lower. Well, we broke through that. Okay, the ideal favorite scenario earlier in the week, guys, was to fade a rally into 82.22. Okay, here's the daily charts, no change to any of these levels, right? Intraday, here we are. The idea earlier in the week was to fade a rally into this. Now, the reason that that's not so appealing to me at this point is because of time, right? Earlier in the week, that converged right on the upper parallel. And this parallel series, by the way, caught this slope. This is the 618 line, okay? And the lower parallel caught the lows. So that level converged on the upper parallel earlier in the week. And I thought this would have been a great fade or great short off this region. So you're not getting it, right? It broke the upper parallel, and here we are, no man's land. I don't want to touch this thing, but Peter, if we hold 82.22 and this thing recovers back below the parallel, I think that would be a near-term play. I think that would be a near-term play. Now, the reason it's a little bit more shaky on this right now is because of the Aussie positioning, and certainly we'll go over Aussie in a moment. That's breaking support, right? But I don't see too much more downside here. I don't want to get too aggressive on the Aussie. So pound Oz, that's where I'm at right now, Pete. I mean, if anything, I'd want to see failure 82.22, still the same level as earlier in the week, but I would need to see this thing, really start to get back into the parallel before I want to start fighting it, because technically this is just would be a breakout play, specifically if it tops 82.25. Again, do I want to get long sterling? Well, not really. It might be a decent hedge if you are holding the sterling short with us on the swing trade, but and not my cup of tea. I'm not really interested in messing with this at this point. Levels are unchanged. It's just that the time decay sort of makes this pitchfork, well, is this really in play right now? The 618 was great on the top and bottom, but what the hell is that? I don't know. Kind of going neutral on this one right now. Peter, did you have a specific question on pound Oz? Are you involved in a position? Let me know. Here's a 60-minute. Hmm. Hmm. Well, isn't that interesting? Hmm. Okay. This is pretty interesting. So you got the 618 retracement of decline off the highs that you made. Um, I guess this is the monthly high for September. So this entire September opening, or the entire September range. Oof. Um, so that's the 618 retracement. A 618 extension of the advance off the monthly low gives you 82.22 is what we're looking at, 82.29 or 82.30. Okay. If this breaks, two equal legs would target 183.31. So in the event of a topside breach, that would be the next level I'd be looking for. Again, guys, just ideal scenario, you put a gun to my head, I'd want to see failure right here in resumption. But the Aussie weakness is still outpacing sterling weakness by a lot. All right, by a lot. Just looking at this on a performance basis so far in the session, sterling is down just 0.27%, Aussie down 0.59. Okay, so literally almost double the losses. So 82.30, 83.30 would be the top side levels I'd be paying attention to if we move higher from here. If we close the session back in this formation, this would be sort of your break zone. And part of that swing high we made for the open of the week. Hey, part of that swing low right there, not bad. So a little adjustment to the levels there on pound Oz. Peter, does that help? He says no man's land. Yeah, I mean, I wouldn't necessarily say no man's land, but I would just say near term, you're slap in the middle of like a 400 pip range. So I mean, it is what it is. The levels I think, my humble opinion, are actually pretty clear. It's just how do you play them from here on the near term front. You're right. You're not near a major high. You're not near the monthly open or the monthly range lows. There's just not a play, right? So I think we get more clarity on this one. We revisit again. I touch on pound Oz very seldom, but when we do, it's typically a decent play for a couple of weeks. So I'll continue to track this one for y'all. Okay, still have four more I want to get through. So let me pick up the pace a little bit. Euro yen. This is literally just for you, Ty. I have not been trading this, but actually worked out pretty well. Here are the levels that we highlighted earlier in the week. Euro yen. Talk about the fact that on the weekly chart, this thing was coming into a very nice area of resistance. Okay, it was a 618 retracement of the yearly range. You had slope for the current operative slope. By the way, this slope is derived by the simple lows right here. Okay, all these parallels are the same exact slope and have offered so many plays. So you had that slope, you had a key 618 retracement, and even former lows from December of last year, right? Big spot. So we were looking for failure. I was looking for failure a little bit higher. I think the ideal scenario would have been like one of these two regions. But here's that 618 again on near-term slope. Daily chart looks kind of messy. I wasn't showing you this, guys, last week. Kind of was showing you this, or earlier in the month. Earlier in the week, I should say. There's that 138.2, right? Actually, it is on there, so let me put that back. There you go, 138.2. It spiked higher, didn't get near 133.80, kind of messy. You made, and was that outside? The high was 33.12, 33. Outside reversal candle yesterday. Off the highs, takes you lower. Okay, there's not much to look at here on the daily chart. It's all about this. So this is unchanged from earlier in the week from that update. Boom. Okay, failure 130, is sort of the near-term support barrier that would confirm a break of this near-term channel, and that's the median line too, which would shift the focus lower. 131.55, 130.78. This is a region of which if we get a drop into, I think would be a nice opportunity to try to get long. It's the August open, but more so importantly, it's some former swing highs and the 618 line for the current slope that we're following. Okay, 618 line, caught decent resistance here, but nice support here, nice support here. That's sort of the sweet spot. I think if you get a drop in euro yen towards there, it might be a decent long opportunity. All things held constant, Ty, this is for you on euro yen, is what looks to me like the threat of an objective weekly opening range break. So still that possibility of the move lower, I think, is there. Ultimately, I think you'd look to buy that if you get down near that 130.78 level, really 131 in general. Key topside targets are unchanged. 133.49 is just swing high. Wouldn't necessarily go nuts there, but these two are pretty big. 100% extension off the low, 618 retracement off the high. They're not as close as you'd want to see them for it to be a confluence per se, but certainly a critical area of resistance. So, long story short, looks a little bit lower from here. Ultimately, I think that decline should give us a nice entry to get back on the long side. Any questions on euro yen? Haven't really touched it myself this week, but it's doing its thing. Not as clean, not as much conviction on any type of momentum there, but the levels still look pretty clear. Aussie, number 7. So Aussie dollar looks like this. Again, no change, I think, to any of the major reference points we highlighted earlier in the week. Okay. The August low day close 72.38. This is what I put 72.20, if I'm not mistaken, is the bullish inval. Okay, both areas of interest for possible exhaustion long entries. So we're below that right now, guys. And the fact that that was looking for this for a long entry earlier in the week was the fact that it was still within the confines of this channel, of this pitchfork. This break shifts things now, right? The time decay on the structure doesn't really shift the focus of 72.20 being an important area anymore. So 38.2 converges on the 2017 open at 71.94, 72 essentially. Former swing lows from back here in August. Might be an area to look for some support, but the bigger picture, still risks further downside in my humble opinion here on the Aussie, which is why for pound Aussie, I think it's just so hard to play here, Pete. Respectively, the pound and the Aussie both look a little tired here. So, it looks like a confirmed break of that near-term channel or near-term pitchfork off the low. I do think you move lower in Aussie. 72, in my opinion, would be a great spot to start to fight. If this is heading higher, you got the monthly open just lower at 71.85, so like 15, 16 pip stop. But it wouldn't get much aggressive on this. Low conviction trade for me, guys, which is sad because typically Aussie is my favorite position. It's just sometimes the clarity is there, sometimes it's not. Also, objectively, this looks like what, if we take this on face value, okay, look at the 60-minute, dismiss the FOMC rally. This looks to me what could be an objective weekly opening range break. So such a scenario, you look for a Thursday, Friday low. Ideally, 72 holds of support, but we'll have to cross that bridge when we get there. Any questions on Aussie? Same thing with Kiwi, guys. It's just a very similar trade. Here's the Kiwi breakdown. I highlighted Kiwi early in the week on the Sunday open. Here's what it looked like. And we were looking for the possible drawdown, okay? Bullish invalidation was 65.66. So we actually did break below that. Okay. So actually, no, the levels are unchanged. Okay. Here's 66.19. That's near-term support. August low day closes the bullish inval. That's 65.65, right? Here's the 240. Again, on this one, actually, the extension might be helpful. Ooh, wow, so that's 2 equal legs down as is. Right here. Watch this zone into the US Open today. And we can kind of dismiss this at this point as well. 67, 67.14 is the topside break. I think we highlighted that level. Yeah, 67.15. Yep. So that's the breach that we need to get resumption, the breakout trade rather, for the broader descending formation that we've been in. It's pretty clean. It's pretty clean. It's better than Aussie. I'll say that much. But in the sense that the broader picture is, the structure is clean. In the sense of the near-term price action, I don't like either of them. If this is going to hold and we are heading higher, this would be the spot, the ideal place to hold. If we break lower from here, 66, and this is the August low day close. Scratch that. That would be your. In the event of the breakdown, these are the levels that you're risking. More so 65, 60, 76. Remember, bullish inval is still 65, 66. Actually, let me put that back then. But in the event of the breakdown, ideally, again, my favorite scenario is that we hold here, breach above 67.14, gives the onset of a simple and clean breakout in Kiwi. So yeah, I noted in my piece yesterday, guys, I'm not a big fan of the commodity block in general. Dollar CAD, I didn't even have it on the list, guys, really quick. I actually did take a position on this yesterday. And it was just basically on the fade of the rally that you got right after FOMC. I actually booked a decent amount and then went break even, which quickly got taken out when this thing resumed higher. So being really, really nimble. You had just decent stuff here with the median line. The 50 line was the exact slope that caught the highs earlier in the month. So on a pullback from here yesterday after FOMC, it was a decent sort of 20 pipper on the way down, but we rallied soon thereafter. So look, this is monthly open resistance for dollar CAD, just higher as 31. If this thing's going to hold, you do not want to see anything beyond 31 on the upside. But low conviction position here on dollar CAD. Last but not least, gold. I bring this up because it's going to be, okay, well, it broke. Damn, I thought I was going to give you guys a heads up here, but here's the breakdown in gold. 1180, 1174, both areas of interest. This is last ditch effort here, guys. If it gets below 1174, there's lots of trouble for the gold bulls. Not too surprised to see this move here. Again, seasonalities are actually looking, typically are pretty constructive for gold into the end of September, early October. So what else can we say? You're testing a break of the September opening ranges here. So certainly continuation threat is lower into the end of the month. There's only 2 days left. So 1180, 1174, both levels of interest coming up. Break above 1193 and a close back above that 50 line is what we would need to see to validate resumption of the broader or the near-term uptrend that we've gotten since last month. I think this low is more important. Still working with the assumption, guys, that gold has put in a more significant low in price. Here's what this is US oil, by the way. You might want to take a picture of this one. This one's been a beauty this week. Very, very clean. But gold on the weekly chart, I'm still under the assumption that this was a pretty big low in price, guys. Just huge resistance confluence, 618 retracement, multi-year pitchfork dating back to 2013. All right, so here are your downside targets. I would want to see price failure somewhere above that region. All right. That's 9:30, takes me an hour through. So that's going to be it for me on this end for the week, guys. I'll have an update for you tonight, but I will see you again on Monday morning on the Daily FX for the free session, and then back here on SB on Tuesday. Any other questions for the weekend, feel free to throw them out on the message board. If not, I hope you guys have an awesome weekend. Thank you so much, Ty. Appreciate that. Jaya, same to you. Guys, have a great weekend. It's slow and steady improvement, Marco. Thank God. I appreciate your questions. It's going to be a while, but we're on the right path. So keep me in your prayers, and I will see you guys next week. Cheers.